Hello friends, I am your friend Kaustav. Lot of my friend ask me, "Ki Kaustav, how can I save tax from my house property?" Today in this video, I'll try to explain you the same. Income from house property is slightly lengthier and complicated process. If you own more than two property and they are self-occupied, then income tax department still consider one property as deemed let out property. Say for example, if you have two property and both are self-occupied, but income tax department will consider one property as deemed let out property and national income deemed to be charged on this deemed to be let out property. So say for example, you have three houses. One is in Kolkata, one is in Bangalore, and one is in Mumbai. Kolkata house, your parents stay in Kolkata house, and Bangalore house, your maybe children they stay in Bangalore house, and Mumbai house, you and your wife stay both stays in this particular Mumbai's house. In this case, you can claim maximum up to two properties as a self-occupied properties. And third one, income tax department will consider as deemed let out property. Deemed income tax will be charged on this particular property. Now the question is, what would be the income tax? Gross annual value of the property would be higher between two. One is rent received or rent receivable. So now comes how to calculate reasonable expected rent. So reasonable expected rent is higher of these three. First is fair market value. Second is municipal value. Third, rent as per Rent Control Act, if it is applicable in this particular area. Now step 1, how to calculate your net annual value. Net annual value is gross annual value minus property tax is equal to net annual value of this particular property. Step 2, standard deduction of 30% of net annual value which is available. Step 3, interest on borrowed capital can be claimed as an expenses subject to certain terms and conditions. Usually people avail a house loan to purchase a house. This loan has dual tax benefit. Principal payment of this particular house loan deductible up to 1.5 lakh under section 80C, and interest on house loan deductible under section 24. Interest on house loan deductible up to 2 lakh if it is self-occupied property. But if your property is rented out, then entire amount of interest is allowed to be deducted without any limit. So let's recap. If you are repaying your capital, in that case you can claim up to 1.5 lakh under section 80C of income tax. Second thing, whatever interest you are paying, if it is self-occupied property, up to 2 lakhs is deductible. If it is rented property, if you rent out that particular property, in that case whatever interest you are paying, that entire interest is tax free without any limit. You can carry forward your losses. Now the question is, what would happen if you incurred a losses in house property? Loss of house property can be carried forward. Income from one house can be set up loss of other house. Loss of income from house property can be set off income from other sources like your salary, business and profession, capital gain, or other income in this current financial year. However, the maximum limit to set off loss from house property income is restricted to 2 lakhs. The unabsorbed loss can be carried forwarded up to next 8 years. Such loss can be adjusted only against the head of income from house property. Hope from this video you can able to understand about income from house property. Thank you. Stay tuned.